Good morning, everybody. Welcome to the Flow Show, Thursday, 6th of March. And a bit of a quieter morning than we're used to. We're getting spoilt with a little bit of a break in things. Nice and quiet to start the day. That's how I like it. Morning, Kate.
Good morning, Ryan. Good morning, Ryan. How are
How
you?
you doing? Yeah, all
Well,
good.
I'm all right, mate. I'm all right. Trying to judge whether this thing is going to go a lot further or if we stop dead around some relatively important levels.
Yeah, my thinking too. And we'll get stuck into the prices shortly. I'm going to see if I can rush through some of these headlines so we can take a longer look at what's going on in markets because we are at some big levels. Right, PBOC Governor Pan speaking about the FX rate says will resolutely prevent the exchange rate overshooting risks. Will implement a moderately loose monetary policy and sees room for a further RRR cut. So it's not going to be a shock if they do pull one out their hat. In Japan, the biggest union over there, Rengo, I think it was late last year, we heard that pay deals, or they were going for pay deals around about the 5% mark. Well, apparently they're going to be looking at 6.09%. That's up from the 5.85% they pushed for or got in 2024. Smaller unions are looking for wage hikes of 6.57%. So that'll be music to the ears of the government and also to the Bank of Japan for their hopes of getting rates higher. Over at the Bank of England, BOE's Peel says evidence points against more rapid rate cuts. BOE's Green says it's less likely that inflation persistence will fade on its own accord. So more likely monetary policy will need to stay restrictive. It says worries of more economic weakness is due to supply rather than or more than it was assumed in the Feb monetary policy report. BOE's Taylor says every MPC meeting will be live for rate moves. Bailey is expecting a pickup in inflation, but it will be nothing like a few years ago. It says we're less likely to get second round effects due to a weakening economy. It says the outlook is uncertain, risks are two-sided. That was those guys speaking at a hearing in Parliament. Goldies, and they're not alone, are getting quite excited about the European economy and Germany after all this stimulus talk. They've raised their growth forecast for both. Eurozone or Euro area growth forecast is up by a whopping 0.1 to now 0.8% for 2025. Germany, they've gone up a massive 0.2 pips to 0.2. So they were seeing flat growth for 2025. Now they see 0.2% growth in 2025. That's what 500 billion is expected to get you, 0.2% growth for the year. Germany, and you can frame this comment because for those that don't know, Germany has been the biggest proponent of telling people to stick to fiscal rules over the years. And now they're urging the EU to ease fiscal rules to boost all this defence spending. We know we've got all this hopium around this 500 billion they want to pluck out of thin air. It's not going to all go in a straight line. Germany's AfD party, they are the second largest after the elections, said they are considering judicial moves against the Conservatives and Social Democratic debt plans, or Social Democrats' debt plans. So they're not happy with what's going on. The Greens pitched in as well. They want a load of climate crap made as part of the fund that's coming as well. Now, several things you need to be aware of. The makeup of Parliament, this coalition doesn't have the 2/3 needed to pass anything in Parliament. And what with AfD being the bigger party, so even if the SDU and CDU all agree on this spending plan or this fiscal debt raise for 500 billion, it doesn't mean it's going to get through Parliament. They do need the help of others like the Greens. So it's not all a done deal just because it's all been announced, something to factor in. Apparently they're going to all start discussing this, or at least the debt brake reform, on March the 13th in the lower house. Remembering they still haven't exactly got Parliament back up and running properly yet either. As for defence debt overall, the Austrian Chancellor says he will not back any plans to raise EU debt for defence, but is ready to back higher EU defence spending. So it's not all going to be a straight deal. What Europe wants to do, raising more money or allowing fiscal space for countries to increase debt for defence. Some countries pushing back against that already. Meanwhile, the market is only seeing 2 further rate cuts this year from the ECB. We were edging up around the 3-cut mark, but now we're less or down to 2 cuts this year. Let's get rid of that because we had a bit of data out. We had Eurozone retail sales this morning. Nothing much to write home about, down 0.3%. Month on month, coming in 1.5% year on year. So a bit of a soggy end to the year, or beginning of the year. Wasn't much good towards the end of the year either. Yesterday's US data, ADP, got the ball rolling on the jobs numbers, where we got a 77k, just around half of what we were expecting, just over half of what we were expecting. We were covering this live on Face as it dropped. It is a soft number, but if it was Bostic a couple of weeks ago who said that the break-even level was around 75 to 100,000 jobs, so we're sort of in that ballpark. It wasn't a disaster. I think you've got to look at it that way. Anything less than sort of 50k or negative would have put the cat amongst the pigeons for the upcoming NFP. And we're running a bit low on expectations for that, around about the 110, 115 mark expectations for that NFP. Rest of the data, we had the Canada S&P services PMI, if I can get it out of my tongue. Blah, blah, blah. I don't, is it even there? Where is it? Can't find it. No, anyway, that came in softer at 46.6 versus 49 previously. The S&P services PMI coming in just before the ISM, that saw a jump back into expansion in the final number, 51.0. Then we got the ISM number, which pretty much blew the doors off. A lot of people thinking that the US economy is starting to falter. Not according to this data, it isn't. Services much higher than expected, was expected to fall back, came in higher, 53.5. Prices paid going up further as well. Employment improving too. Nothing in here was looking too bad in those numbers. However, it was looking a bit more messier, should I say, in the respondent comments. A lot of uncertainty in those comments, people not knowing what's going on with tariffs, policy, and the rest of it. But overall, the numbers are pretty good. Right, quick pause there, Kay. What did you make of the data?
Yeah, well, as I said, I wouldn't be surprised if we get a better number on this ISM, because I think there's some positive vibes around potential deregulation and things, and I guess it's filtered through into that number. About the rest, really, I don't see too much to change the actual picture right now. Yeah, I think the market is really trading different stuff, and those data, I think we will need to see how they evolve if we de facto get all that promised deregulation in the States. They're working on stuff. On the other hand, are people going to continue to hire that much? That's going to be the question. I think it's going to be case of really watching how those numbers evolve, and then the subcomponents, especially around employment and orders. That I think is one that we're going to have to watch very closely.
Yeah, thanks, mate. Last bit of data from the US was the factory orders, which came in as expected, 1.7%. So a decent number there. We did get the durable goods revisions, which are in there somewhere, which came in pretty much round about where they were previously. So no real change to those numbers there. Beige Book came through in the evening. That saw a slight rise in economic activity since mid-January and slightly optimistic expectations for economic activity over the coming months. That's the report run through the central bank regions. Right, onto the tariff stuff. Lutnick, he's been pretty busy these last few days. He was talking about the tariffs on Canada and whether they would be as much or whatever. He said it will be 25%, but there may be some categories left out. He said his understanding is that the big three automakers are compliant. This is talking about Mexico and Canada. Then he moved on to the next batch of tariffs. Says on April 2nd, we can talk about a broad trading model. Some reciprocal tariffs will come in right away. Then he said in 2026, we renegotiate the USMCA, which gives a bit of a deadline or a time frame pass for Mexico and Canada. He also said that Trump is leaning towards helping out automakers for a month. The White House confirmed that later, saying the US is giving a 1 month exemption to autos coming in via the USMCA, and that Trump is open to hearing about additions to tariff exemptions. Apparently, he's going to be looking at exempting certain agricultural products from Canada and Mexico. Overall, Kay, just that little phase there between Lutnick and whatnot. It's another bit of watering down of threat.
Absolutely, Ryan. It's a bit a strange one. We've been talking about that. What's the plan or what's the strategy there? Is Lutnick tasked to play the good cop in all of this, or is he going to get the boot before the end of the week? We still have to know. We haven't heard Trump say anything about him, right? Specifically because Trump will not refrain to criticize or congratulate members of his close entourage when they say or do something. So yeah, that's a bit of a strange one. The USMCA is a rather far away deadline because it says 2026. I mean, could be start end of 2026. So it's very very vague. And having heard and anticipated what Trump was trying to do with Mexico and Canada, I thought that USMCA would be on the table much earlier. But I guess there's other bigger geopolitical stuff to take care of right now. And that's that's a bit it is a reasonable sign, those kind of delays that are coming, whether it is the delayed tariffs, whether it is the USMCA being discussions being a bit delayed. That gives a lot of time for the counterparties to come up with some decent plans.
Yeah, and I suppose if they get deals here and there's no tariffs on some of these goods that are already in the USMCA, like autos and agriculture, then there's probably not much to renegotiate. Because everything will be tickety boo. But that 2026 line will have the market thinking out of sight, out of mind for now. You know what it's like to do with it. So moving on, Trump is also working with House Republicans on a resolution to fund the government until September. We've still got that hot potato being chucked around. We're still in the midst of all this tariff stuff. There's still calls to be had, calls being had. Mexico's Shine Bomb says that she's going to be potentially having a call with Trump this morning. She says Lutnick is seeking an agreement, but it will be Trump who will decide on the tariffs. Then we had some shots across the bows ahead of the Trump-Trudeau call. A Canadian official said Canada will not end tariffs unless the US lifts all tariffs. White House trade advisor Navarro said Trudeau should tone it down. Then we had this call, Trudeau and Trump. The best we got out of it was a Trump truth bomb saying that nothing has convinced me, speaking about fentanyl, that it has stopped. He said that it's gotten, he said that Trudeau said it's gotten better, but he said that's not good enough. He then said the call ended in a somewhat friendly manner. And then he went on a rant about Trudeau's only doing it to stay in the election and he hasn't called a date yet and blah, 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 blah. Over to the Ukraine. US has apparently cut off intelligence sharing with the Ukraine. White House Security Advisor Walt said Trump will lift the Ukraine aid pause if talks are nailed down. And Politico reported, and that's been picked up again this morning, that Trump's aides had held secret talks with Zelensky's political opponents in Kiev. So that story is still bubbling. That's another reason why Zelensky might come running back to the table with his tail between his legs. The Kremlin's been up and about, not happy with what Macron has been spouting the last couple of days, saying his speech was extremely confrontational and hardly the sort of speech by a leader who wants a peaceful conclusion. It seems like the speech is that France is thinking about continuing the war. So Mr. Macron making himself busy as usual and getting short shrift over in Russia. That's all I've got from headlines. Canis, you got anything else?
No, Ryan. I think we can look ahead to what's to come in a couple of hours, or in an hour, actually.
We're looking ahead, but not looking forward to it.
Yeah, that's the correct one.
So, of course, we've got the ECB coming up. Rates expected to get chopped again by 25 pips. The depot rate will come down to 2.5%. The market pretty much, as we've been saying, looking for two more cuts. So we get to 2% round about June. We'll see whether they get them down there and can keep them down there. The discussion today, or the market moves today, are probably just going to be over. Have they come far enough already? Do they want to pause? Expect Lagarde to face a ton of questions on these yield moves. She should be happy that potentially there's some fiscal moves afoot. She's always telling countries they need to do more. Germany's looking like it needs to do more. The difference, though, is whether she sees it as big growth measures or just defence stuff coming through. But she will get badgered on these yield moves. Of that you can be sure. Anything else we should be looking out for, Kay?
No, regarding those yield moves, I think there would be only one question to ask is, to which she will probably not give any answer today. But the one and only question for the markets to judge whether this yield spike continues or not is to ask her whether she will buy bonds to help the government fund it. And but yeah, as I said, we won't get the answer to that today.
No, definitely not. Should probably say that there's nothing. There's no financial stability worries coming from this in the first instance. Now, I want to bring this up quickly, Kay. This all this fiscal raising and whatnot, what's going on. Okay, I want to take you back to 20. Let me think. When was it? 2018. Reminding me a bit. No, it's a bit later than that. Mr. Biden's blue wave of infrastructure spending. Remember, we went through that old saga. And I just want to highlight this because all this talk about fiscal spending, yes, it's potentially has the ability to boost growth. But Germany have called it an infrastructure fund. Okay, obviously a ton of it's going on defence. Okay, infrastructure doesn't happen overnight. Okay, this is stuff that is going to be planned for the next 5, 10, 15 years. Okay, it's not going to see GDP jumping up into boom times by Q2 or Q3 this year. So the market has been reacting to this in part. Some of it's obviously dollar move if you're talking about euro dollar, but it's a short-lived thing in my opinion. All this fiscal stuff, it's got to be borne out in the data, and we're not going to see that for months and months and months. So that's a first warning about whether some of these moves can continue. Okay, doesn't mean euro dollars going all the way up to 120 in a flash, although some are already looking to price that in at the moment. So we've had the news, we've had the reaction. Now we're probably going to be in that situation where we need something more for this to keep going. What I would say, though, against that also is that these have been some big, decent moves. So there's going to be a lot of catching up to be done, as Kay mentioned as well. Funds, model funds, even in the option space. A lot of people who were getting a bit complacent while we were trading around 105 and not doing much. Tons of options set up either side of that. We broke that. We broke 106. We broke 107. So big levels have been broken, and that's going to cause a bit of catch up. So I'm expecting dips to be bought up, or at least the euro to remain bid for a few more sessions before we settle down. We've already run into the 61.8 fib of the move from 112, and there's a bit of a fib party going on today around these 61.8s in quite a few pairs. So we're at important levels in a lot of pairs. Kay, just before we go further into the charts, you remember that that was when we were in our old chat room when we talked about the Biden's blue wave and the reaction to that.
Yeah, as you say, it's going to be longer spun out, but the market has to trade it in a way. First of all, because it was looking at lower yields, European growth being anemic, and everything. So it's come as a bit of a surprise for many. It still has to be voted, so I trust that we will have some setbacks on in the yield sphere as well. But the market is right to trade it because it will need to be funded, right? So, but then as to the impact on growth, it will be at first at least concentrated, as we all know, around defense. So that is going to be the sector. Those companies, that sector is going to benefit, and we already see it in some of the equities is going to benefit from it. Now, will it create long-lasting growth? That will have to be seen once the sums have been made up between what you spend for defense, help to Ukraine, and then what the rest of the economy is doing. It will create jobs. It will create money flowing into certain sectors. But will the rest of the economy, and then I like to call it the street economy, the man in the street, will he see benefits from it? It could be that it is actually beneficial because who says increasing spending will need more workforce, more manufacturing, probably potentially keeping wages higher. So it is all very possible, but that is not something that we are going to see in the month of March 2025. It's going to be longer spread out, and then we will have to monitor whether the benefits are real in well, specifically the German economy, but pan-Europe, because most of the countries are going to see at least some benefits from it, because Germany is not producing or having the base for everything. They are going to have to work with other countries as well. And
Yeah,
France and et cetera, et cetera.
yeah, absolutely. So you've got to be careful. And let me tell you, most inexperienced retail traders who weren't on this rally are going to be thinking about buying it at the top, thinking it's going to go to 110, 112, wherever. And that's when things get a bit dangerous. Okay. We've had this news. We've had the reaction to this news. As I say, some of it was what's going on in the dollar as well, but that hasn't changed the picture. So, can we see pullbacks? Yes, we can. Your marker probably is 107. If we're getting back below there, then we're probably going to be a bit over it, and we might set up a bit of a range, 105s, 107, something like that. Yes, we can still break a bit higher. What I would say, the first place we are going to see the reaction, and you can timestamp this, is going to be in the next German zoo and IFO surveys. We will see how German firms are taking this news of this fiscal spending. So if they like it, optimism, as we've spoken about before, sentiment can breed activity. So that's probably the first data point we will see a reaction to this news. Obviously, that will come later in the month or beginning of April. So pencil that down, stick it on your wall. That might be worth a few pips to the euro at the time. Right, as far as the levels go, I want to show, I'll put this in our chat room. Okay, this, and I spoke about it on Face yesterday, this zone 108, 30, 70. Okay, it is huge. Okay, it is one of those areas where it's had the same things going back decades. Okay, not really clear to see, but you can see we've had all this action in here. That's going back to 2015. It goes back even further. We've had action going back to the early 2000s. Okay, the reason this level is important, this zone is important, because when it works or when it moves, it gives you some big moves. Okay, just look at the last time we were here, which was not long ago, latter part of the year. We were messing around up here. Sometimes it was support, sometimes it was resistance, on and on and on. But when you get the breaks of these areas, okay, we had 150 odd pip break when it went, then it rallied back all the way back to the level. Okay, held it. That was your confirmation, and then look where we went from there. Okay, you go on to a wider chart and you can see when you have messing around these levels, when they break, you get big moves. You get big moves and you get chances to get in and trade around it. Okay, so it's not a level perhaps you can trade intraday on the short term unless you're trading the supports and resistance. But when you get a confirmation that it's going to be going one way or another above this, it's something you can get on. Okay, and you can get decent pips out of it. Sometimes you get not too far, but you know the evidence speaks for itself. You get these big reaction moves around this area. Okay, it's one I've traded plenty of times before. Okay, big zone. You need to pay attention to it. Okay, it may take a few weeks, a few months to sort itself out, but if you get the clue that it's holding one side or the other, you've got a good chance of going with it and making some decent pips on that one. 61.8 euro sterling. We've had a little nudge above it, but it was holding below previously, and now we're back below. So this is another one in the mix. Are we running into a bit of trouble now? I think there's a possibility. I'm still long euro dollar, but I think the price action is saying that maybe we've just for now gone as far as we're going to get. Yeah, we might get a bit more of a push through, but if it doesn't hold any further rallies above the highs it's prior made, then maybe we're going to see a bit of sideways action. Obviously, I'd love it to keep going, but that's the thing. I'll let Kay speak about cable in more depth, but 61.8 nailed it almost to the pip. My Aussie Kiwi heading towards a 61.8. Dollar yen heading towards a 61.8. You're getting the picture here, folks. These are going to be big levels, and that 61.8 in dollar yen in particular is a big level on its own. The 147, another one of the big fat red ones. So lots of levels in play, lots of big levels in play. It could be the maker or breaker of some of these moves that we're seeing at the moment. I'm going to look quickly at dollar mex because that one pulled up at one of the levels, one of the intermediate levels that we've got going on around 20, 34, 35. We've had a bounce from there. I think for this one, Kay, we're probably going to go back into a bit of range trading until we get the next phone call headline or whatever.
Yeah, we are stopping on a very small, very short-term trend line. I mean, literally only a couple of days old. Yeah. Yeah, I think range trading is a good option right now because we still don't know what Trump really is going to decide, right? One day we pause, the next day he comes back and says like, oh, let's hammer them anyway. No, I think we're in a bit of a traffic zone here that we okay, we had like spikes above below, but this we're looking at the last like bigger range. We are somewhere in the middle. Not really not really knowing whether we whether this should drop back below 20 or go back to have a visit around the highs. So we are going to wait. I think we can stay here until we see the jobs report tomorrow in the States, and when the dollar will likely try to put in some move again. So yeah, I wouldn't be surprised if we just hang around here for a while. We've both been selling it on those rallies, and I've scaled back on all those dips down, and now I'm just sitting here.
Oh, we lost you, mate.
Yeah, I don't know
We
why.
lost
Am
you.
I back?
Yep, you're back.
Okay, okay. Yeah, I had one of those things again where it says like check your audio, but it didn't happen for a long time. Yeah, so I think we're in a bit the waiting chamber here right now.
Yeah, I might get back on the jobbing around the 55s into the 40s again. Just see if we can put a few pips in the bank while it's not going anywhere else. Right, Kate, I'm going to put it over to you nice and early.
Yeah, okay. And the
Oh,
one that Bran wants to see all the time, but I'm sure a lot of people are wondering what is going on here and what potentially can go on. So have a little look at that cable. And as Ryan already mentioned, we we have stalled at the 61.8 of this move here. Okay, it hasn't really traded a lot around here. It hung around, but this one here, this 129.66 is a very long term 38.2 of the whole decline from 2014 down into 2022 when we had the trust quarantine moment. So it may not, but I mean it just makes for this zone to get more interesting and all the way up to 130. This I think we now need to see whether and ideally we'd have a look in it in this zone and see whether we can get back down a little bit. Now from here, now that this 61.8 has shown up, this is a pretty decent level. People will find intermediate levels on the way down. Call it 128 30s again. But I think the more important support zone, since things can get a little volatile in today's markets, it will be coming in around 128.15, 127, 127.70, anywhere there. If this has to continue higher on any setbacks, this should start to support again, and then perhaps have a look into that thing. But and there I completely join Ryan's view right now. I think we may just have seen that first big leg. I can't see too much of a reason for reversing the whole dollar thing that we've seen over the past few days, and it was all just a dream, and we're going to come down all the way back down. But for the other side of the currencies, it may just be that we have done enough right now for a first leg, and then now it's over. I reckon to the dollar to show us what it's got over the next 24 hours. We're also now hanging around, and we're actually below here. The back below the 38.2 here on the dollar yen. No, it's actually, where are we? No, this one is actually broken now. But yeah, we are making fresh lows on the dollar yen. Uh, Talking about 61.8 and a bit longer term prices, 147. The figure is the next big level. Um, Yen has been on the equities bandwagon. Look at what's happening on the equities again today. Sea of red. And I think that is very important to keep a very close eye on the yen. We've seen those yield spikes. They have had in their own right a little bit of an impact, but the yen is not on the yields train right now. It is on the risk train, and it is on the outlook train for potential growth slowdown, maybe in the US on the back of what the Trump policies are looking like. And that is what is really impacting the yen right now. So I'd be careful to catch knives. We have seen all those spikes. Maybe I should go on a little tighter one. We've seen all those spikes come in, but most of those spikes here have been accompanied by spikes in equity markets rather than yields. Okay. Um, so I think we need to be very careful with what's happening on the dollar yen. As you can see, we are back on the bottom end of that channel. But since it's such a steep one, we've seen bounces of it, but every time it's coming lower and lower. So I'd be very careful. I still think that the damage was done when we went back up to this 151 area here, and it capped, and now we are going back down this weekly thing. We never closed above or so, and I think here that spike here, that's where the damage was done. So yeah, I'm still bearish on the dollar yen. I don't have like a real position on, but I'm like just from time to time, jumping in and out. That is how I trade it right now. That euro yen, yeah, this is the euro spike, the euro yield spike, because euro has been extremely strong versus everything. Okay, so it had to have an impact, but we are shying away from. We just reached the daily cloud, even went inside, but it seems to really have capped the debates. Have a look at what's happening around 160 and a half, if ever we get back up there, because it could be any test there could be met with renewed selling. Obviously, bigger picture, we're still holding this 155 and a half, 156. That is to be respected. Metals, again, silver holding better than gold. I told you why. We came back to retest once more this latest little range bottom that we have seen. Um, I think range potentially, if we see more cooling down on tariffs, etc., potentially a move back into the 2860. But if we start to see those yields capped again, it may be that we get back onto the yield bus here now in gold. That's kind of my idea. It looks as if after a period of yields did not matter at all, we may just start to be back onto the yield bus. And if you see the European yields perhaps cooling down, UK yields cooling down, if it drags the US yields back down a bit, it could be that we find some support and go back. the longer term, it's still extremely bullish. I mean, there's nothing absolutely changed. Nothing will change until we break back below 2,800 or so for a starter. But I mean, in the meantime, we have to look at what's happening in the on the dailies. Silver holding much better. Who says spending? Who says like, especially Germany using that word infrastructure spending? That it is logic that silver is holding up a lot better than gold, and we are turning around this 32.30. But I think here 31.80, and then lower 31.15, 31. That's going to be important to hold down if we have to move back higher. And if we move higher, very close eye on what's happening around 33.40. As we know, that's the trend line that I borrowed from our good friend Stelios, and it is still very valid. So 33.40, watch out what's happening on silver. Dollar CAD for our good friend Derej. Um, yeah, good question. I thought 143.70 was going to be a bit of a level. We crapped down below, went back to retest it. We are still not far off, okay? Your next level here is 143, the figure, bang on it, and 144. So basically 143, 144, and keep a close eye on what's happening at 143.70. That's what I would say right now on the Canadian dollar. In theory, Canada should do okay because the delays, but then we also know about the relationship that Trump has with Trudeau right now. Even with Trudeau being out very soon, I'm not sure that the new people in place would be any any more friendly with Trump than Trudeau has been so
You
far.
have no faith in Carney?
Yeah, I mean, hey, and I was going to say, and I've been saying that over the years as well in the chat room. I'm actually looking forward if it would be Cardi because when he was at the Bank of Canada, he made me a shit ton of money with his policies. So yes, give me Cardi every day, and I hope he's going to make us a lot of money.
Make trading great again.
Yeah, MTGA trade market. Um, Dollar Schweiz. Well, if you talk about the dollar Swiss derage, there's one that we have to look at first. Look at this euro Swiss, yeah. It was tumbling out, and then we had this euro move, which really derailed everything that we could expect. And as a matter of fact, if you then go back onto the dollar Swiss, it's been actually in this whole thing where the dollar got slammed down. Yes, the dollar Swiss is gradually coming down, but that euro Swiss rally has actually held dollar Swiss relatively stable. I think in the shorter term, you still trade even if we are now trading 120 points below it, which I think is it's a negative looking scenario for the Swiss, right? It's your Uh, you could call it that way, and it's your slow yen. You have, if you look at the Stockies, an accelerated euro, but if you look at the Swiss, it may be your slower yen. And that's perhaps how we have to take it. I think we're coming into relatively interesting support if ever we get down to 88.20, 88. Even down to 87.5 because we had those spikes lower, we had those spikes here. The 50% of the up move comes in right around 87, 85. It's about 80 points away. This is your support zone here at Derege, I think. Okay. On the top side, this intermediate level here, high here, low there, 89.60. That's already 100 points higher. But I mean, this market has been a bit violent at times, so that's your zone. But then I really think it's going to be your case if we stay or get back above this 90 figure a quarter. That's going to be the level to watch on the top side. All right, that's how I would look at it. If we really break here, then I'd say that would mean the dollar is in real trouble. At this stage, we've spoken about the shorter term. We are at those 61.8s. We can slow the move. We can build in a pause. We've got ECB. We've got NFP tomorrow. But in the more medium term, as I've been saying on the prior shows, I do think the dollar has turned the corner. And if you see upticks in the dollar, I would suspect that right now we are going to find sellers. Okay, this is still my overall view on the dollar right now. I can have a quick look at all things commodity currencies. Aussie has rallied, but then we are turning again around this 63 and a quarter. Had a bit of an overshoot. I'm hesitant. Okay, I've been long in this. Various episodes, but this morning I said, well, okay, I mean, maybe time to take it off and reflect. So I am in reflection mode, and as you can see, probably the market is also in a bit of reflection mode. And I also think this can last unless there's something happening today, headlines also. But I also think this could last until tomorrow, and then we grab or we see what there is to grab in this. We should find support anywhere closer to 62.70 mainly in this area here between 62.70 and 62.90. We should now find support if this has to continue, okay? Same as in the euro, same as in the cable. We could be in a bit of a pause mode right now, but these are still Kiwi is actually doing a bit better than the Aussie right now, but these are still hesitant if you look at the longer term. Okay, I just had a quick look at it on the Kiwi. We tagged, or we even went a little bit outside the daily cloud. We are turning right around the top of the daily cloud. Perhaps this is an interesting one to watch. We are not too far away as well from this 23.6. So a bit of an interesting one here, up to 57.5 to watch in the Kiwi. If we get through, it may mean that we are on our way to a bit higher levels. But if you look at it at the global move, still not out of the woods, I'd say, and unless we break above 58. If we break above 58, then I think we are going to go higher. Okay. And that's about it for me for today, Ryan. I think we've
Thank you very much, mate.
enough.
Yep, cheers, thank you. Right, enjoy yourselves, boys and girls, for the ECB and listening to Madame Lagarde, where no doubt I'll spend most of the press conference taking the piss out of what she's wearing and whether De Guindos is going to speak or not. Have a great day, everybody. We'll see you all for NFP Friday. Have a good one.